It could be hard to get markets energized this week as traders focus on a run of mainly secondary economic data amid minimal expectations for a slew of third quarter earnings reports. The Toronto market ended last week down after buying sentiment took a hit from a gloomy forecast from the International Monetary Fund. U.S. markets also ended last week lower, with indexes failing to get a bounce from a strong earnings report from banking giant J.P. Morgan Chase. It beat expectations for earnings and revenue. But expectations for this earnings season are muted, with analysts expecting a 2.1% year-over-year decline in S&P 500 operating earnings. That would be the first such year-over-year drop since the recession that followed the 2008 financial collapse. On the economic front, markets will open Monday morning digesting weekend reports from China on the latest readings on the country's trade balance, along with consumer and producer prices. The Chinese economy has been instrumental in helping the global economies recover from the 2008 financial collapse. But expectations from the world's second biggest economy have been diminished as the Chinese government slowed economic growth in order to get a handle on persistently high inflation. In the U.S., investors will look to more data suggesting that the housing sector has finally turned the corner following the collapse in home prices that sparked the 2008 crisis. Housing starts for September are expected to come in at an annual rate of 770,000, up from 750,000 in August. Meanwhile, existing home sales are reckoned to come in at an annual rate of 4.72 million, down slightly from August, but that would still leave home sales 11% above year-ago levels. From the Canadian Press, I'm Malcolm Morrison.